learning how to draw trend line appropriately could be one of the best ways in which you can catch very good moves in the market, risking just a small portion of your account to get very huge risk to reward ratio. Whether you are trading trendline breakouts, you can catch trades like this. You can catch trades like this. Whether you are trading normal trendline respect, you can catch trades very good risk to reward ratios, just risking a little portion of your account. So many people draw trend lines the wrong way and they end up getting stopped out because they don't know exactly where the trend line should be crossing. So this is a volatility 75 example that I'm going to be bringing to you, but you can use it in any market you're trading. So I'll share with you the proper way to draw trend lines, how to take trades properly and get very good risk to reward ratio. So you want to watch the video to the end.
Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to your channel by hitting on the subscribe button and notification bell to not miss out.
Replying to one of the messages I got on this YouTube channel today, someone was asking me to make a video on how to draw trend lines on smaller time frames and all of that. But trend lines are actually could be drawn in all time frames, so it works in any time frame that you're trading on based on what trader you are. Now trend lines are simple a diagonal form of support and resistance, because there are times where price after moving, especially when price is trending, price will most sometimes will tend to find support or resistance in a particular zone. Now if it's uptrending, it's going to find something like that, which would be like support. Okay, so most times you see that price can respect a couple of times. Now you see that we wait for the first rejection, the second rejection, from the third rejections we are going to be taking our trade setups. All right, and sometimes it's going to break through. Sometimes it will come and then break through the trend line. Okay, some people will be entering based on violent breakout, depending on the candlestick that breaks out, while others will be waiting for price to come back and retest. They'll be entering to catch most like that. Okay, so this is a kind of trend line breakout. So whichever way you're trading, it's important to understand how to draw trend line properly. Sometimes it could be down a downward trend line where price is moving maybe in a downtrend and tends to find kind of diagonal resistance. So you see that price will get rejected in a zone, go and get rejected, and once you see price hit the first and second times, you'll be waiting for price to come back, hit the third times, you'll be taking your sell trade. Your stop loss will just be above the candlestick, all right, or above the trend line, and then you want to be targeting these previous lows here. You can be targeting this low here, waiting for price to come back, and if it happens to break out, sometimes you break out, come back and retest, and then you can see look for a buy setups to catch a move like that. So that's basically it. But now, how are we going to draw normally on our live chart? So go to a bigger time frame like this. What you do, number one thing you have to understand about trend line is looking for zones that are obvious. All right, so if I just observe this chart here, I can just look at this and understand that these are obvious zone. If you look at this ranging from here right to here, you see that it's obvious that price get rejected a couple of times here. So here you just connect your wick, you make sure you get a touch just above of the wick, which is where we have the opening of the candle, right, the wick itself. Then you drag. Now once you drag, you have already gotten 2 touches. Okay, now what you want now is price to come back and respect the third time. Like here when you drag, okay, you already see that now price came back the third time. Let's just say this is how price was, right? So after dragging and connecting the first and the second, which are the peaks, what we call the peak of the candlesticks, when you connect the first, the second, what you simply do is you wait for price to come back and reject the third time, while you look for what confirmations. You look for entry confirmation. These confirmations could be rejection candlesticks. You can see doji candlesticks and all of that. This doji candlesticks is a sign that there's going to be a bearish reversal in this situation. So once you see the candlestick, what you do now is you take a sell order. Now when you take your sell order in this situation, you are going to be targeting based on these lows here. All right, we have lows here. So at the moment we have this to be our previous low. Okay, so we have this to be our previous low here. All right, you might want to be targeting like that. Okay, just imagine that now you take your short trade here. Okay, now remember this is a swing trade because it's in a bigger time frame. So remember, we are going to drop to smaller time frame. I'm still going to share with you what I explained, what I meant in the comment, that the market is fractal. So you can just connect. and then you drag down, you wait for price. All right, so from here you can already see this is more than 1:7, like 1:7 risk to reward ratio. Okay, so you just place yourself there because price came and hit the third time, and then you wait for price to play out. All right, you can see the price drop, just as simple as that. Right, this base may be on swing trade. Now if you want to drop further to smaller time frame, let's say the H1 time frame. All right, I want to show you that this the market is fractal. So what you see in the big time frame or in the bigger time frame, you possibly see it in a smaller time frame. Now this is the H1 time frame. Right, so if you look at these zones here, let's just say here, you can see obvious zones. Right, you can see obvious zones here, and from experience, just glancing at my charts, I can already see a zone where we have diagonal resistance, where we have kind of uniformity. So you can just connect, just drag from here to here. Okay, so you just drag. Okay, so you just put your cursor there, yeah, and then you drag, you connect. Right, so you have already gotten two touches. Once you get two touches like this, right, once, twice, right, you wait for price to come back the third time. From the third time, all right, you look for rejection candles, and then you are going to be shorting. Okay, price did not touch completely, you wait for price to touch. All right, price touch here, he close above, and then we saw a bearish rejection candle. What you simply do is you place your short trade. Right, we place a short trade, you simply place your stop loss above those candlesticks, and then you want to target these previous lows at the moment, because this is what we have as previous lows. Now in some cases I might just use another trend line, because looking at this down, we see have uniformity. So we have kind of diagonal support, or let's say diagonal support in this situation. So what I can do here is maybe I just try to connect. All right, I just try to connect again, and then I just drag, and this trend line below could be what my target in this situation. So I can just drag right down to my trend line here, and then see how price plays out. All right, you see that price plays out right to target. Now there are some times where I'll use the parallel channel tool. Okay, but the essence is for you to understand how to draw trend line properly. You can see how I connect. I just take the wicks from the top, or I take the peaks from the top, or the troughs from the top. So I make sure I just get the touches as that. All right, so and I just get the touches. So sometimes I can use the parallel channel tool, and then I just take, okay, I drag. Okay, once I drag from the parallel channel tool, it's just going to sketch it out, and automatically it's just going to come out with something below. All right, and it will just plot the below for you. All right, because this kind of uniformity. So when I enter, I'll be targeting the zone, and in some situation, if you go to 30 minutes or 50 minutes, you're going to see this a complete trend on its own. So sometimes you can still wait for price to break out. Okay, you can sell as long as price continues to come back and hit, you sell. You see, wait for price to come back and hit, you sell. Right, so in many cases you are going to win. No, it's not like you're not lost. There are some tests where you're going to have liquidity scenarios, you get trapped, and then price still continue. But in most cases now, there are some people who wait for breakouts like this, price will close. See now that price get rejected, and we saw a strong bearish candle. So we enter. Now in this situation, there are two ways to target winning based on breakout. You can target based on the size of this pattern. Okay, from here to here. All right, let's say from here to here, that's the size of the pattern. All right, you can target this size, and then that's the same thing you put down, and then you target if you are selling using a breakout. So remember, there are two ways. You can either just enter, and then you can see that you wait for price to come back and retest. So you see now that at the breakout of that candlestick there, which is this bearish strong bearish candle, it is, you take your sell. When you take your sell, you place your stop loss above the candlesticks that broke out. This is the candlestick that broke out. Now the breakout is very important because you have a very strong bearish momentum candle, and breaks out are stronger when there is momentum. All right, this kind of breakouts are stronger when that momentum, like here for instance, we had something that was false, right, because there was no momentum. Now if you look at this momentum, and you see that in most cases price is going to move down. So that's simply how you can understand this concept, and you see that price moves down powerfully. Okay, so that's for the H1 time frame. Now you see that what happens in a bigger time frame can happen in the small time frame and all of that. Now there's another thing I'm about to show you guys. Now within this trend, right, if you look at this move here, within this move we had many trading opportunities still based on the trend line. Okay, now it will depend on who people who are trading as day traders, or maybe even scalpers. Now if you drop further to 15 minutes time frame, okay, right? You drop it further to a 15 minutes time frame, you are still going to see possibilities in which you can use. Now, if you just look at the very well, you see a very beautiful downtrending market, price getting lower lows and lower highs. All right, trend lines could still be very good indicators to use here to determine our entries. While you are holding, maybe you took this as a one or maybe a single big trade, or as you call it, you can see be taking smaller trades. Or if you didn't even take that, you want to be scalping, maybe you have a small account size, because you know with a smaller time frame your stop loss size is not going to be that much. So you simply connect, all right, simply connect from smaller time frames like that, and then you wait for price to come back and test. Now you connect, okay, you just connect, you leave it, okay, then you go to smaller time frame, you go to the smaller zones as well, you just connect, you leave it, right? You are expecting price to come back, and then you get a third touch. From where you get a third touch, you are going to start taking your trades. Okay, so you can just drag down, okay, you drag down. So note how I'm connecting my trend lines. I'm making sure that I get the touches and I don't skip any zone. You make sure you connect the first and the second. You don't connect, or let's say you don't take this zone here, all right, you don't take the zone here, you connect or you jump like that. You skip the second zone, you violate it, you go and pick the next zone. No, you don't connect like that. You make sure that the first zone should be connected to the second zone, this zone should be connected to the next zone. So it's simple. Right now, once you connect like that, you just drag the zones. You're expecting price to come back and test the zones. All right, now you see that here, what happened? Price came here and then we had a rejection candle. This is a good rejection candle, a very strong doji candle that is pushing downwards, indicating that what the bulls try to push price up, but the best finally push price down at a reversal zone, or a trend line zone, which is a kind of resistant in this situation, a diagonal resistance. So what you do now is you short. Then your stop loss is what? Your stop loss is above here. Okay, your stop loss above here, and then your first target should be at this previous low. Some people don't know where to target their trades. This is the previous low that you have here, right? So you just drag and then you wait for price to move. All right, you see that's a good winner there with at least a good risk to reward ratio. That's how important trendline trading is. So you can catch very good risk to reward ratio, right? Then you drag, okay. Now you see that price comes back again. This time around, it comes and violate. Now, if you look at it very well, you realize that there was no rejection this time. Okay, if you were combining the trendline knowledge with what the candlestick, you see that here price just came strong bullish candle and it closed outside. You see that in this situation, if you were considering the two, you would have sold. You wouldn't have sold, all right. But people who place limit orders, because there's some people who place sell limit orders, so that when price comes, you just execute. They were going to be stopped out. But whatever the case, the theory, you are going to win most of the times. Now you see that since there's a breakout with momentum in this situation, you want to decide to go long because you have a momentum candle. Now if you go long in this situation, where are you going to target? You should be targeting these zones here, all right. You should be targeting zones like this. Okay, you should be targeting zones like this. Let's say you enter, let me say you are an aggressive buyer or an aggressive trader where you trade breaks out. Now you look at this breakout because of this bullish candle, maybe just target the zone up here and then you place, you wait for price. Boom. See that you have still hit. So you see how simple this trend line strategy is, guys. It's very simple and you can catch very good winning trades with high risk to reward ratios. So remember, you can apply it in any market. And all right, so that's simply it, guys. So make sure you share the video with other traders, and remember, we are writing our book will soon be published, and I will share it with you, this secret strategy, or a complete secret strategy that has to do with risk management psychology, a complete trading course, and it will soon be out. So make sure that you stay tuned. You can join our Telegram channel. I'm going to drop the link in this video's description below, so that when we publish the book you get alerted. So thank you for watching, guys. So make sure you subscribe to the channel by hitting on the subscribe button and notification bell to see more, and see you in the next video.